Microsoft has earnings this afternoon. Now, this $1.6 trillion market behemoth has so many different revenue lines going on that sometimes it's hard to keep track of what's going on. They have software sales, of course, Windows. They have cloud revenue. They have LinkedIn. They have all these different business lines that are contributing and impacted in a variety of different ways this year. But one thing that we have our eyes on here is the potential share buybacks. Microsoft has been very aggressive about buying back its stock, and should they continue this trend, we are likely to see a positive price feedback loop where them buying stock and them being such a large constituent of market cap indices is going to push the price of Microsoft stock higher. Looking at implied volatility, for the options expiring this week, the earnings options on Friday, they're pricing in a move of around 4% per day for the stock. If we're going to bet against that, we're going to look at the historical earnings performance and see that Microsoft has only exceeded a 4% move once on the most recent earnings move. Of its last 6, the previous 5 were all less than 1% move, and they were all positively green. So we're going to look for an opportunity to benefit from this collapsing implied volatility structure and a slight bullish move given our share buyback expectations. By selling 2 of the 215 calls expiring Friday and buying the wings at 212 and 217, we protect ourselves, but we can enter this trade for a very small debit of around 25 to 28 cents. This gives us a potential 8 to 10x profit opportunity should Microsoft close around 215. Now, this will require a slight jump in the stock of around 1.5% from where we are today, but most of the benefit from this trade comes from the collapsing implied volatility post-earnings.